the pullback, the setup, and the road to 2026. Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. As we all know, over the last few weeks, the shares of NEO dropped sharply from $8 to like $4.75 at one point, triggering fear and confusion with the sheeps among retail investors. But the reason behind the drop are short term. While the long-term setup in 2025-2026 remains one of the strongest in China's premium EV sector, this is what actually happened and why the next 18 months look dramatically different. Why did NEO fell from $8 to $4.75? A lot of people are wondering. A forced liquidation cycle, not a business decline. The entire move from $8 to $4.75 was driven primarily by index tracking funds reducing China's exposure, institutions raising cash into year-end momentum, algos selling on technical breakdown, a temporary November battery shortage bottleneck that capped Onvo's volumes. Excuse me, guys. None of this changed NEO's fundamentals. Not at all. Deliveries stayed strong, margins improved, and demand for Onvo remained above capacity. In other words, the stock dropped, the business didn't. The China EV panic. While NEO outperformed peers despite the sell-off, NEO deliveries rose 36% year over year. NEO remained the only premium EV brand with a growing ASP, not cutting prices. All major competitors, Tesla, China, Li Auto, posted declines. The drop was sentiment, not performance. What's left for December this month? December is historically NEO's strongest month, and this year is lining up similarly. Onvo battery shortage resolved. NEO is deploying 8,000 new swap batteries nationwide, effectively doubling inventory levels for Onvo. This clears the bottleneck that held back November. Backlog. Seasonally a high volume month, there is a measurable backlog for Onvo L60, both trims, the L60 and the L90. ET5 Touring, ES6, EL6 expect a December delivery print that signals recovery momentum into Q1 of next year. Q4 of 2025 expectations, you can reasonably expect ballpark 123 to 128,000 deliveries for Q4, improving vehicles margins from next-gen models plus Onvo scale revenue growth about 25 to 30% year over year. Continued costs down from 4th and 5th generation swap stations. NEO is quietly stacking a high-efficiency, low-cost operating model. What Q1 2026 looks like? Q1 is shaping up to be the strongest Q1 in company's history. Battery supply fully normalized. Onvo L60 reaching full manufacturing rhythm. Onvo L60, the S60, the sedan, is expected to launch near Q1 or Q2, expanding the TAM. How you like them apples, guys? An Onvo sedan. 5th generation power swap rollout accelerates. International expansion, Europe, Middle East, Southeast Asia resumes in synchronized phases. Onvo L80 to be launched. Expectation for Q1 2026 deliveries 100,000 to 115, depending on the S60 launch timing. Heading toward profitability mid to late 2026. This is the key part. NEO has already stated its goal of achieving profitability in 2026, and analysts expect vehicle margin back above 17 to 20%, corporate gross margin returning to double digits, Onvo providing steady high volume, low capex cash flow, Premium NEO brand stabilizing at 20 to 25,000 units a month. If delivered, this supports a meaningful valuation re-rating. Price per share expectation for mid-2026 given return to profitability. China EV market 32+% year over year in 2025. Expanding Envoy lineup, margin recovery. 5th gen swap network efficiency gains. A fair value range for mid-2026 is $18 to $26 per share. This assumes 260 to 300,000 annualized deliveries, 10 to 12% corporate gross margin, improved institutional confidence, and China re-risk pricing. A return to even half of NEO's 2021 valuation metrics would put the stock above $20. In conclusion, the sell-off was noise. You heard that right. The setup is real. The bear trap is being set. The drop from 8 to 475 was a technical flush driven by liquidity, not fundamentals. With bottlenecks resolved, demand strong, margins improving, and the Envo platform expanding, NEO enters 2026 positioned for higher volumes, higher margins, lower cost structure, path to profitability. This is why many investors now see $4.75 not as the end of the story, but as the beginning of the 2026 turnaround cycle. Coiled like a rattlesnake, getting ready to spring forward. This is not financial advice, so please do your own due diligence and research. I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.